So I'm actually recording this on Monday, and I missed my video update last week. I intended to do it on Friday, but I went to a little bit of riding, and I was supposed to get back in time to make the video. I got hung up a little bit longer than I wanted to out on the trail, and didn't have time to make the video, so I'm making it here on Monday. And also we're going to get to just kind of an overall assessment of how my trading's been going thus far. I'm just going to look at performance, just going to look at kind of just a rudimentary version of the performance, and that's not going to be perfect, but it'll be relatively close. Just give you a good idea of kind of how things have been going. And then we'll also take a quick look at where we're at for the month of December, and take a quick look with where I'm at in terms of portfolio allocation between cash secured puts and covered calls. Like I said, just try to have a why. You know, my why is part my family, part my hobbies, Come out here and ride on this beautiful Georgia roads and enjoy it. And it's Friday. It's like 11:30 or something like that. So, you know, there's a lot of freedom in taking that risk of trading and trying to really just capture an income from trading. Do things like this, you know, one of the reasons I especially like options is I feel like I'm in a really good spot. I'll show you here in a second, but December is turning out to be very well. It's going to be hands down my best month. Got a helicopter flying in the back, a little noisy, can't really see it. There it is. But yeah, anyway, December's turning out to be my best month, and 3 weeks ago or even a week ago, there's just no scenario where I thought that was going to happen. And, you know, I learned a lot, continuing to learn a lot on pushing trades a little further out, because I'm going to start tracking this, but a high percentage of the options are getting closed early anyway, and it pulls it way left from what you originally planned. So, you know, I feel good where all my stuff's at. It's Friday, and me and my mentor like to say, sometimes you just got to let the meat smoke, man. Put it on the smoker and let it do its thing. So that's what's happening right now. I'm not worried about it. I'm out here enjoying this beautiful weather, enjoying my bike and enjoying some peace and quiet on these trails. It's not busy. That's what it's all about for me. I'm just trying to extend this ability to do this. So anyway, just know your why. You know, if you know your why, that's going to help you stick with the turbulent times, and it's going to propel you to really try and learn your craft and, you know, figure things out and all that good stuff. So because you don't get a lot of this type of flexibility with other things. So anyway, let's get to some numbers. Let's get to some real stuff. I want to show you how well December's doing. All right, so now that you've gotten to see what I enjoy doing as a hobby, or at least one of my hobbies, get to some serious stuff, I wanted to take a quick look and just show you where I'm at with my positioning. So this is my cash secured put side, and you can see I'm down to just literally 4 cash secured puts in my active options trading account. And I expect basically what's happening with iron, it's dropping. I think it's in the mid 30s today, or upper 30s. You can see that 2 of these expire this week, this coming Friday, and then 1 next Friday. I'm fully expecting to get, unless something crazy happens and it shoots right back up, I'm expecting to get these 2 assigned. Hood, I think, is trading around 113 or something like that. Hood's been having a big sell-off. So I'm most likely going to get these, but these don't expire until next week. So basically, you can see that my entire portfolio is rolled over to covered calls. And the challenge that poses is that as long as the market is going down, it's hard to get good premiums for covered calls. Now, with that being said, the market does turn on certain days, and when it goes green, you can get a really good premium on a covered call. And that's basically what I've been doing. When the market turns green, I'll open a covered call on these stocks, and then when it turns red, I'll go ahead and close it. You can see my activity since December 10th, which was, looks like last Wednesday. I've closed a bunch of these things. This is my covered call side. So this means if I bought this back, except for this Fiserv one that did get assigned, I did make a decent profit off of that. I did take a cost basis loss, but I'm going to go ahead and take that cost basis loss so I can take the tax loss in this year, which I'll need because of my severance and some other things. I want to take as much tax loss as possible this year. So I'm going to roll the proceeds of the sale of those Fiserv shares out of Fidelity and into Schwab and just get it all consolidated in one place. But other than that, all my other covered calls, they weren't really going to go to get assigned out to somebody else. So basically what I've been doing is I've been closing them earlier. So on a day when the stock goes down and you have a covered call, usually that covered call, the option on it will get more valuable, so you can close it out a little bit earlier and take some of your profits. So that's what I've been doing. So what you'll see right here is this is the initial premium collected, and then this is what I bought it back at. So my ultimate return, unless I sell the shares, which you can see none of these sold except for Fiserv, this would be my ultimate return, which turns into my return on capital. So you can see just averaging around 2%. And then you can also see that we've got a lot of open positions, and we actually did a pretty fair amount of stuff today. You know, this column right here is the open date. These are all the assigned dates, but if I sorted this by open date, when I sold the covered call, you would see that we've got a pretty fair amount of activity that we've done in the last few days between Thursday and today. So sold a whole bunch of covered calls. Had some decent capability to get some on these. VST, SoFi, and PSIX finally. So went ahead and sell those. This just means if the stock gets called away at these rates, then I would make this much from the proceeds of the stock. So as you can see, my entire account is basically rolled over into covered calls, and that's going to slow down the momentum a little bit. But the percentages on these are still pretty good. I mean, I'm averaging still 2% on an average of around 37 days. So, you know, that's basically 20+% per year. I'd take that all day. Now the covered calls that I've done prior, I've had some really good returns on those, and we'll jump into that here in a second. Because before I jump into the kind of overall performance returns, I wanted to quickly take a look at December. And remember, we've switched now to just track against the realized gains. What you'll see again in the potential earnings is those are cash secured puts that were open. But as we talked about in a previous video, if those stocks get assigned to me through a cash secured put, then the premium that I got for that ultimately rolls into the cost basis of that. So these unrealized returns, if you're getting a bunch of assignments, it's certainly not going to be that. So that would be a little bit more accurate if you were not ever getting any of the assignments. But when you close cash secured puts early, or the option expires worthless, or if you close a covered call earlier, or that matures and you selling your shares, whatever it may be, those are all the realized gains. And so far, what we've earned for December is around 5,000. Remember, we're targeting around 6,000. So we're pretty close. I do see a path to getting this. You know, I'm probably going to, throughout the next couple weeks, I'm going to likely close some covered calls that are already set up for January, and that it's going to continue to chip away at this. Do I think I'll hit goal in December? Yeah. But do I think it's going to be a really, really good month? No, not with Hood turning down, and not with IRN turning down, and SoFi and some others. Those were all some covered calls and some cash secured puts that I expected to realize this month, but they just don't look like they're going to play out that way. So I do think I'll hit goal, and ultimately I'm very happy about that. All right, so now that we've taken a look at December performance, let's go ahead and take a look at kind of what I've put together for just an overall performance of all the stuff that I've been doing so far. Okay, so what you're looking at here is basically I put together just a quick summary of all the cash secured put stuff that I have done so far. And again, keep in mind, this doesn't count the premiums rolling into the cost basis. So I'm going to put that on the side for now. But if I just talk about the premiums and amount of time that I held those, what's the average monthly return, annualized return? It's about 4.1%. Looks like I'm holding these options for an average of around 21 days because we close a lot of them early, and then that would translate into around 7.6 monthly returns and around 92% annualized returns. So I am not complaining with that at all. Now that it is a little bit skewed because it doesn't consider the rolling into the cost basis when you get assigned the shares, but just from a straight up cash secured puts perspective, so far the strategy that we're doing is working out really well, although now we've kind of shifted to a lot of covered calls. And even on the covered call side, if you look at it so far, the covered calls, the returns are a little bit lower, and that's understandable because you want to always make sure that you are not going below your cost basis. And the return on the capital so far on that has been around 3.5%. And it looks like I'm holding my covered calls for an average of around 14 days. And we remember we always buy selling covered calls for around 30 day the mark for around a 30-day mark out. But as they change in value, we get out of those covered calls early, and it looks like the average of that is around 14 days. So that's not too bad. That comes out to around 7.5% monthly returns and around 92% annualized. Very similar to the cash secured puts, although the return on capital is not as good, but the amount of days I'm holding these is a little bit less. So basically, I'm making that amount of money in less amount of days. So just overall, I'm overall happy with this strategy. I'm happy with how things are going. The only thing that I'm looking forward to is having a little bit more capital in here so these percentages can turn into some higher gains. You can imagine if I get around $5,000 on about $160,000 of trading, I could potentially hit my $10,000 goal if I double that, if we can add some more capital in here. So that's what we're kind of really looking at hard on how to do. But other than that, you guys are seeing the market today. It's gone down. It went down pretty substantially on Friday, and it's gone down again. That's going to impact my overall account balances, which I'll show a little bit later this week. So I'll probably put out 2 videos this week. But for now, we're just kind of hoping for a little bit of a December rally. And even if we don't get one, that's okay. We're well positioned to close out December, and we're starting to build out January already. And a little bit into February, actually, with some good premiums on PSIX. But anyway, that's it for this week. Technically, last week on Friday. Hope you enjoyed a little bit of view into my hobby and a little bit more of my why. And I'll talk to you guys in the next one. Have a good one.